That'll give you a sense for how well they performed. We go through all the analysis during the live event. So let's start off there. MU. This was the pick that I highlighted last week. This was the long green bar from Wednesday that I was focusing on. I loved the price action right in here. Gap higher, stock continues to push higher even after the earnings announcement. So it didn't wait long to digest these gains. It just kept pushing higher. As I mentioned, when the stock gets away from the EMA 8, I want to wait for it to pull back to it, and that will provide me with a nice entry point. So while we're waiting for the EMA 8 to catch up or for MU to pull back, you can see that right here yesterday, there was a chance at the EMA 8 to buy it. But we had new information. We had new market information. So the stock is still right at that EMA 8. So that was a nice pick. Last week, Harry and I also highlighted a couple of bullish put spreads. Please go back and watch the live event. Make sure that what I'm telling you is the truth. That's what you should be doing. Get your due diligence. There are a ton of YouTube gurus out there who are full of BS. So I like being fact checked. Please do it. So we went through some searches. I showed you how to construct a custom search using Option Stalker Pro. And one of the stocks that we found was MRVL. And the stock bullish put spread that we highlighted was selling the April 19th. So that expires a week from Friday. And there we were selling the 68.66 bullish put spread. And we were doing that for a 40-cent credit. It was there. The bid was there. You can see the stock is still at 71.50. And we've got a market that's falling apart. That's what the market's doing today. This is what the market did last Thursday. And we're going to get into that in great detail. Big warning sign. So right now that bullish put spread is performing beautifully. If you wanted to reduce risk, you could, and you could buy that spread back in. So let's take a look at the March 19th spread. That was the 68.66. And so we would be buying that and selling that. And so you can see, I mean, the trade is pretty much right where it was. Option implied volatilities have increased a little bit just because of what's happening in the overall market. So you can take this position off for basically where you put it on. So, and that would be a prudent thing to do. Hey, Harry, how are you doing?
I'm good, good.
I'm going to go through one more position here, and then I'm going to have you come in and talk about GS was your pick from last week. The other trade that we highlighted was a bullish put spread on MRNA. And in fact, Harry put that one on in his challenge account. He was selling the 98.97 bullish put spread, and that was for the April 19th expiration. And he was doing that for a credit of 20 cents. So
25 cents.
98. Yeah, you got 25 cents. You're right.
25 cents. So I closed that trade already with a 20 cent profit.
So beautiful trade. Nicely done. Thanks for joining us. Why don't you tell us about Goldman Sachs, and then we'll kind of get into some market analysis.
No way around it. Goldman Sachs, I had in the challenge account, and I messed up the trade. My fault. No way about it. So I entered it on Wednesday, the 27th, I believe, at around a price of I forgot exactly what it was. It was around 410. Thursday trades well into profit. Even on Monday, the trade remained in profit. I did not take profit on Monday like I should have. Then I could have broken even again yesterday morning, I believe, and I held it, and I held it too long, and I did not see that large SPY pullback that we had. And the large SPY pullback actually obviously pulled back Goldman. So if you were in the trade, you had chances for profit, you had chances to break even, or if you were stupid like me and held it, you had a loss. So I took a loss on that one, not because I think the setup was bad or the trade was bad, but rather I should have taken the profit when I had it, given the where the market was at, and obviously we had that drop. So I also had a Marvel bullish put spread that is working out well. I have no doubt that's going to finish in total profit. That bullish put spread is a 69.68, and if Marvel did not breach that on a day like today, I don't see it breaching those support levels. And as I mentioned, Moderna, I cashed in with 20 cents out of the 25 cents in profit. So that was an 80% return.
So a week ago, we were looking for, we'll get into a little market analysis here. We were looking for a compression here at the high and for a breakout to a new high. And the reason that we're putting on bullish put spreads is because we did not have that breakout yet, but we had the table set. All of this previous price action right here was very, very bullish. When we're trading, we go with what the price action has been telling us until it tells us differently. We do not pick market tops. So all of this strength that we had seen, and we had a nice compression, very few dips, very little selling of any kind, told us that, hey, you know what, that unemployment report on Friday, it should come out pretty well. We should see strong job growth, and wage inflation should be very reasonable. On that type of news, we should get the breakout to a new all-time high that we're looking for. And on Friday, should that scenario have played out, then we would have been focused on shorter term longs, day trading longs, but we wanted to get some bullish put spreads on because that is a neutral to slightly bullish strategy that allows us to go further out of the money. It allows us to take advantage of time premium decay, and we're in the strongest stocks. So you want to be putting those trades on Wednesday and Thursday. Okay, so we started to do that Thursday in the chat room as well, and we looked at some other stocks. All of them are in decent shape right now. So the idea is that when you are in the heat of battle on a Friday and you get that breakout that you're looking for, that is not the time to be scrambling around trying to be putting bullish put spreads on, because as soon as you get that breakout, the put premiums are going to collapse. The bid-ask spreads are going to widen out. The market makers are not going to fill you on that type of spread. And that income that we would get from those bullish put spreads is going to feed us for the next 2, 3, 4 weeks. So here's how everything played out. So on Thursday, I'm going to go into a 15-minute chart, and then we'll go back and we'll take a look at the actual price action. So we get this gap up to a new relative high. Actually, it was right at where the previous all-time high was. We're expecting this gap to be preserved. We get this choppy little light pullback in here, mixed overlapping candles, no wham, 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 no heavy selling pressure. Okay, this looks pretty good. So we can sell some bullish put spreads in here. We're getting a nice grind higher in here. That's fine. We can start taking some day trading longs in here. Got this breakout here. Now we get the breakout bar. This is when we were saying in the chat room, you need to be cautious in here because we need to see follow through, okay? We don't want to see this reversed right away. Well, we didn't get that follow through. And the longer we waited, the less likely it was for us to get that follow through ahead of a major announcement. Okay, so, we kind of wait to see what happens. You got some day trading longs on from in here, but you're not adding. This breakdown below a VWAP, or excuse me, VWAP coincided with a bearish 1OP cross. This is where I said, hey, everybody, you should be pretty careful with your longs in here because we're getting close to the low of the day. And there's still a possibility that we could fill this gap. Well, lo and behold, this is the towel, and this is what I'm getting at right now. These long stacked red candles came on massive volume. And we don't care why it happened, okay? We don't care. We only care that it did happen. And this was a sign of institutional selling. And this was a gigantic red flag that went up. And you can see how there's very little retracement into these candles. That tells you that this is persistent selling pressure, and the market closes on its low of the day. And that leaves an ugly, nasty scar right off of the all-time high. This long, bearish engulfing candle that consumes almost 2 weeks of price action, and that is 200% of the normal ATR, 20-day ATR. Ding, 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 ding. Okay, Pete went into the day fairly bullish. Am I bearish at the end of the day? No, but I am not nearly as bullish. Now I'm watching to see what happens. And that's where we've been since Thursday. So on Friday, I warned everybody, we're going to get a bounce. If you were out over your skis and you had too much long exposure, this is when you want to be exiting some of those positions. We still don't know that the market's going to roll over, but we are not as bullish. We're neutral to maybe still slightly bullish, but we got to wait and see. This is a warning sign. So Harry, I'll let you kind of chime in. You've watched everything unfold real time as well. What was your take?
Right now, I'm just looking for shorts. That's my position at the moment. I am looking at the 10-year Treasury. I'm looking for shorts. Obviously, there's some strength in NVIDIA. I closed my NVIDIA position this morning. That was just out of abundance of caution. But it seems to have strength. So if one was to, I guess, go long here today, you'd be looking at NVIDIA. I mean, look, clearly the CPI wasn't as bad as this reaction is showing, but expectations were that there was going to be a good inflation number and that rate cuts would be pushed up. And so what happens is that you get this focus, and the market always tries to find that silver lining. That's why generally market tends to go up. It's many, if you threw a dart, you're going to hit a bull market, not a bear market. And so you shift your mentality away from, okay, rate cuts are going to be pushed back, but the economy is strong. And then you start looking at, before good news was bad news, and then it starts turning into good news being good news. But first, the question really is how deep this sell-off is going to go for me. And right now, obviously, you have the 50 SMA sitting there at 508. We're about $5 away from that on SPY. We have broken down below Thursday's low here, which was at 512-ish, 512.76. I believe we broke below that earlier this morning. So, yeah, I think that, I'm kind of in wait and see mode because there's a danger here in going short, which is at a certain point, this downward trend is going to be reversed, or it may continue. And the only way to know that is where's the market going to start finding support? Could it be right here where it's hovering right around 513? It doesn't seem to be wanting to break below that. Perhaps if the market finds support, there are plenty of good longs here that you could get at a discounted price like NVIDIA. But if it doesn't, we should have our shorts lined up. And there are a number of them. Let's see here. There was Skyworks,
SKWS.
There we are. SWKS could be a good short if it breached pretty much 3 SMAs today in one sitting. AMT, American Tower. I hate REITs, but this particular one has breached its trend line. It has breached its last notable SMA, the 200, and it is down 5% today. So there's another one to watch as a potential short. So there's a number of shorts. Obviously, there are less longs given the condition of the market. Even DJT is a potential short here, but it does have the 100 SMA at 32.52. I'm not sure how much technicals matter on a stock like DJT, but it's just worth noting.
I had my pick of the day, and I posted this in the chat room probably 20 minutes after the open, was CBS. Boy, do I like that short. You can see you've got this low plus trend line here that was breached to the downside. It blew through the 100-day moving average. This is what you like to see. So you get these big gaps down right here, and the stock just gets pummeled. Okay, well, there was some selling pressure in here. When the market was still waffling around and testing the all-time high, what was the stock doing? Compressing below that 100-day moving average. Could not get above it. And so today, the stock gaps down below the 100-day moving average, and it starts breaking this upward sloping trend line. Oh, yeah. Let me take the extended hours view off. When I saw this tick, tick, tick lower in here, I'm like, yeah, this stock is going down. Why? How did I know that? Well, first of all, let's take a look at the market price action in here. You've got mixed overlapping candles here, which I told everyone in the chat room. So big gap down. This is a crappy, wimpy bounce in here. Do not trust it. You've got mixed candles. That tells you that every little rally like this, whap. Every little rally, whap. This is no bueno in here. And when I see the market bouncing like this, tick, 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 lower for CVS, breaking all those D1 support levels. This is a short that I want to get on, and I feel very comfortable getting on it early when the market is still searching for that high of the day, because I know as soon as it finds that high of the day, and it will find that high of the day, we've recovered about half of the range. When that selling resumes, the stock is going lower. So, and I have had a bearish bias since yesterday when I noticed these candles here. Okay, look at that volume. If buyers are aggressive and buyers are engaged and buyers are interested, you will not see the type of move that we had last Thursday. It will not happen, because as soon as that selling pressure starts, they gobble up everything in sight, and you never get those stacked red candles. Same thing yesterday. Somebody was selling, and I don't care why they're selling. I don't believe it was a CPI. What's 0.1% higher than expected? Big deal. It's the culmination of everything. Its valuations are lofty. Yes, the Fed is not going to hike rates anytime soon. Inflation's starting to tick a little bit higher. Maybe it's soft economic news in Europe. Maybe it's something in China. Who cares? I'm not playing junior analyst here. My goal is to follow the smart money. The smart money is getting out. That's all that matters to me. So important. You know, I posted in Reddit that last Thursday, I posted before the open on Friday. I said, hey, everybody, you know, here's where I was.
I'll be right back.
What's changed. And so, of course, in the comments, you know, I didn't say this was a market top. I said there's a time to be very, very cautious. And these are the first signs of selling pressure. So what do I hear back? This is not a market top. Oh, well, thanks for clarifying that for me. Based on what? You know, you don't know what you haven't even given me a reason why you don't think this is a market top. You just post whatever the hell you want to. I'm trying to lay out all the different variables and all the reasons and all the price action that are supporting my market bias. And you can see it works. So, there are always going to be people who speak their position and, no, this is not going to be a market top. I didn't know that. I certainly was cautious. And so that was a warning sign. So in here, we got flashing yellow warning signs. Proceed with caution. Where I was looking for a breakout on Thursday, now I'm not looking for one. I'm more inclined to be balanced, to be neutral, to look at trades on both sides of the market. And I did know for those that were overextended here on Friday, we got that nice bounce. You got that big sell-off. Look at that bounce. Bull markets die hard. We were going to get a bounce. So you didn't have to panic Thursday when you saw this. You should have been leaning on that D1 chart and all of that strength in there, knowing that we're going to get a bounce in there. Buyers are still going to come in. They are in buy the dip mode. You're going to get a bounce off of it. How that bounce unfolds tells us what we can expect next. So we recover about half of that range, and then we kind of stall out. As we start getting into this week, the Fed has been referencing inflation. Inflation is more persistent than we like. So we're not going to be cutting rates anytime soon. Okay, we got the CPI coming out on Wednesday. We've got this big selling right in here. We're already in cautionary mode right now. So let's go to the sidelines and let's see how the CPI comes out. Blam! There are a lot of people who are hurt today. Not us. We're looking for opportunity. Instead of hoping and praying that our positions come back and that the bottom is not going to fall out of the market, we're taking short positions. We are trading what's in front of us. I believe this is what we're going to see. I believe that the market is going to pull back. It'll at least test the 50-day, maybe a little bit more. And then within a week or two, we're going to have earnings announcements from mega cap tech companies. I think those earnings, they can even miss a little bit on the downside, and it won't be disastrous for one reason. AI. AI is the next big thing. We don't even care if companies make money on AI. We don't even know how they're going to make money on AI. Hey, they got AI. So with all that excitement, you're going to see a little bit of rally off of the tech earnings announcements. And the earnings could be decent. They could be good. That little bounce that we see will establish, in my opinion, a lower high double top. So you can get short in here. I would be careful because we know that buyers are still going to be interested after a run like that. So when you get a nice big drop in here, very important point, if you are short, take gains into weakness. Do not wait for the bounce. Take gains into weakness. Then take a pause. Wait to see if we get that bounce and that lower high double top. Then you'll have an opportunity to perhaps even take some longer term swing shorts. Then I believe the market kind of comes back into maybe this $500 range, maybe above the 100-day moving average. I think we could waffle around for a while this summer. I think we may have seen the high of the year until the election. We'll see. This just tells me there's very heavy selling pressure out there right now. And it's not just inflation. It's a culmination of a lot of things that are going on right now. So short term, yeah, I like the short side. I'm going to be taking profits when I see this market really hit an air pocket and sell off. I'm going to be taking gains with the expectation that we are going to see that bounce. So that's kind of where I'm at right now. CVS, I love that. That's going to be my pick of the day. I'm going to take a quick look and see if we've got any questions here. We are in a bull market, yet the price action is softening. Now we're looking at shorts. Can you talk about how we should consider our experience level when we're looking at shorts, especially for newbies? Yeah, that's an important point because a professional trader is going to know what to look for. and they're going to know not to get aggressively short here and overstay their welcome. They are going to know, just as I said, you need to take your profits on shorts into weakness. You do not wait for the bounce because it could be very violent, especially after a run like that. So for most young traders, newbie traders, we could not take any shorts in here. Did not advocate shorting at all. Now you can consider taking some day trading shorts, but keep your trades very, very short term. So the place where a novice trader can start taking some swing shorts would only be on that double top lower high that might unfold, say 3 weeks from now, that scenario. So yes, if you're a new trader, these inflection points are very, very difficult to trade. Just like this one was tough to trade, because if you were short in here and you didn't realize that a bounce was coming, you're getting short in here looking for the next leg lower, and you got your head handed to you. Well, we were out of short positions here waiting for the bounce, and when we got it, boom, we were loading up on the long side. Harry, I'm just answering some questions right now, so if you see any, please let me know what you'd like to address.
I missed most of that. Let's see here. Well, okay, all right, and great. Well, I do have some questions here from the chat room. First, Ryan points out ACN as a nice short. I agree. ACN is a nice short. I'd like to see more, but I tend to like stock. I mean, look, there's no doubt if you look at the daily chart, ACN is in a very bearish mode. It had a huge drop there on March 21st, broke down through, got rejected at the 50 SMA, broke the 100 SMA. Then it kind of consolidated between the 100 and the 200, and then today it breaks below the 200. My only issue with ACN, and this is actually it's a fairly big issue, which is the volume, right? So it averages a volume of 2 million today. You see it's running below that. When you have a day that the market is actually has high volume and your stock that you're looking at has below average volume, it just, you know, when you want these breaks of technical indicators like the moving average here that you get on ACN, when you want to have faith in it, part of that is volume. And what this suggests to me is that tomorrow this could easily be reversed. So I would be careful with it, but I think it's in the right format. And the same thing for TDY here, especially TDY. TDY, you can see perfectly bearish, everything about it. However, it averages 208,000 on the day. So I would stay away from those. ACN of those two, I would choose ACN. But then we had Amazon and Apple being asked about both. I mean, look, I like Amazon. I think Amazon's relatively strong today. I like the kind of, let's see if I put this here. It's in a very clear, put the trend lines on the bottom and on below, and you see a very clear range for Amazon that is right here at 180, and it tops out right around 188. So it's right in the middle of that range, but it does have relative strength today. Amazon breaks that range. You know, I'm currently long Amazon in the challenge account. I don't see any reason to abandon that long at the moment, but I took profit on the McDonald's short, so now I'm long Amazon. But you know, if you wanted to be cautious about it, I would wait until it breaks the upward part of that range.
Yes, you also have earnings coming up, and that's on 4/25. So be very mindful of earnings announcements that are coming.
Yes, and then tech, which was mentioned in the OneOption chat room today, and I think Dave actually also went long tech. I like tech. It's currently hovering at VWAP on the intraday. It broke its high here. It's actually right on the, let me see, the all-time high on this thing is a 49, 30. It's right at its all-time high. And I think tech is an excellent long. If you were to go long in this market, I would take that. Snapple code. I have a question. What are those indicators you have that look something like RSI? Wonder how they work. I wonder. I mean, maybe there's, I don't know, a whole thing written about them called the wiki. And Pete wrote about all of these things. So if you go and you check it out, you'll see the indicators that you're seeing on Pete's charts. You have the 1OP, which is his proprietary indicator that really is mapped to SPY's 5-minute. You have the LRSI, which is not RSI, which is an excellent trend indicator. And you could see how LRSI and the 1OP kind of follow the movements. 1OP is predictive, LRSI is more reactive, but they're both trend indicators. We do not use RSI for good reason. And if you're using RSI, I can guarantee you're not a profitable trader. So just please, please, please don't use that shit crap fucking indicator anywhere, because things can be oversold, they can be overbought for a long time. I mean, imagine going, oh, NVIDIA, it's oversold at 550. It's oversold, it's really oversold at 650. Supro 750. I mean, it means nothing. Just ignore RSI. Do yourself a favor. All right, that's would it be worth averaging down here or waiting for a potential drop in the market? Rarely worth averaging down. You have to have a really good reason to do that. You have to, and generally, if you are a novice trader, and just keep in mind, when we're answering questions as if this is what a novice trader should do. And by novice trader, I mean someone who is not consistently profitable, someone who at the end of each month is not taking profit out of their account. So if you're going to listen to our advice here, it's what novice traders should do, right? So when I say you should not average down, that's a general statement. No, there might be times where you should, but as a novice trader, you'd be much better off just keep it as a general rule. Do not average down. Average up. Averaging up is exactly what you should be doing. It's harder to do psychologically, but averaging down, unless you're a consistently profitable trader and you know the times when you should do it, don't do it. As simple as that. Just don't do it. And yeah, I know you use RSI Snapple code, and I guarantee you have not consistently pulled profit out of your account month after month after month. There's just no way you did if you're using RSI. Absolutely no way. Same thing, MACD, all that other crap. There's no way you're a consistently profitable trader if you're using those indicators to make your decisions on day or swing trades. I've never, ever seen a profitable swing or day trader using those measures. Those measures are there for amateurs and for people just starting out to look at it and go, oh, wow, look, I have something here. This could be the holy grail. It's not. It's a piece of garbage. Don't use it.
I want to talk about averaging down. The big issue with averaging down, especially for novices, is that, if we take a look at, let's say, Boeing, oh my gosh, this is such a powerful trend. I'm going to buy a dip. I'm going to buy a dip. Oh, here's a dip. This looks good. This looks good. There should be a bullish flag. So you buy in here. Oh no. Look at that drop. Oh my gosh. Well, this is so strong in here, I'll buy some more here. And then when it goes back up to here, they're still going to make money on it. And you've taken a mistake and now you've compounded it. And now you have a bigger position on. So every time you look at your positions in your P&L, you've got this gigantic loser because your average price is not here. It's up here and the stock is down here. Uh-oh, now the stock just takes another leg lower. And now you've got a really big loss on your hand. As it doesn't recover, this is going to mentally weigh on you day in and day out until finally you hit your uncle point. I'm done. I got to get out of this crap. And so you take a monster loss on it. And in this case, the stock never does recover. In fact, We've been talking about Boeing. It looks like a good short, but all of us hate trading Boeing because the stock is all over the board on news. So, but anyway, that's the risk that you have with averaging down, is that you've taken a mistake and you failed to admit that you were wrong. And now you're going to compound the problem by adding to it. What I encourage you to do is only to average up, because your dollar cost average will be lower than the current price. So you buy here, really nice move. You buy some more here, and your average cost is still below your entry point. You are mentally positive. You're on board with this trade. Even if the stock pulled back, you can scratch it. That's not what you're going to do if the stock maintains its strength, but that's mentally where you're at. So you always have that safety net, and your average cost is lower. That's what you want to be doing. And you've got confirmation along the way. You were right. You were right. You were right. You were right. Want those positive reinforcements.
Someone here asked about the MFI indicator. It's the money flow index indicator. That's like volume weighted RSI is all it is. I mean, if you have a rancid piece of meat and you put salt on it, does it make good? No, it doesn't. You should not eat it. Same thing. RSI, once again, in all its incarnations, in anything that starts with overbought or oversold, do not pay attention to it. It is complete and total crap. Nobody uses that crap. So just ignore it.
Looking at ALPN, just had a bullish explosion alert. It kind of looks like that stock might have been halted in here. I wouldn't be trading that anyway. There's definitely some news on it.
Yeah, you got some takeover news on that.
Yep. So let's see. I had a question on Dogecoin. I don't trade crypto. Harry doesn't trade crypto. I trade crypto stocks. Harry trades crypto stocks, but I don't trade cryptocurrency itself. It's not something that I understand. It's not something I care to understand. From my perspective, it has value to the degree that somebody says it has value. It's kind of like gold, but gold, there's actually a physical nature to it. I don't trust it. A company that makes a product and that sells a product and that generates revenues and that is a going concern, has been in business for a long time, it has brand, that I can put my money behind, that I can understand. So I'm not saying don't trade cryptos. I'm just saying I don't.
You know why I don't trade crypto? Look, if you're good enough at blackjack and you can count cards, you have an edge, right? There's an edge there. If you can count, if you have the rules are right and all that, it's math, right? In trading equities, you have an edge. That edge is called SPY, right? You can call it whatever you want. You can SPY, you could say ES, you could say SPX, whatever. But we use SPY as the proxy, right? So SPY, the market, SPY. Why is that your edge? Because 75% of all stocks revolve around that index. And it goes up, whether the stock is in the index or not. 75% of stocks in the market will go up with it proportionally. That is your edge, because you can then look to see which stocks are overperforming or underperforming that day's movement in SPY, which ones are stronger than the market, which ones are weaker than the market. That gives you the window into institutional buying and selling. That's what you want as a trader. You want to know, where are institutions putting their money? Why? Because they're a fuck ton smarter than you are when it comes to this. That's why institutions don't lose. So you want to see, where are their breadcrumbs, where are they putting their money? Relative strength and relative weakness to SPY allows you to do that. So the edge you have trading equities is you have this centralized gravitational pull, like a sun in a solar system, and you know the force of that gravity, right? In Bitcoin or in crypto, you don't have that, right? Bitcoin is the center of the crypto universe, but all the other crypto, it does not have a gravitational pull on other cryptos. You can have Bitcoin down and Ethereum up, and then alt coins up or down. So Bitcoin really becomes almost a odd, strange, fundamental endeavor of whether or not you believe the finite level of Bitcoin, the halving, all of that is going to lead to just this constant increase in price. It's going to go to 200, 300, whatever. If that's the case, fine, act as an investor, right? Act as someone who'd go, I don't care that Apple's down right now. I like the company. I like the fundamentals. I'm going to put my money in there and come back in a year or two and check to see how it's doing. That is what you're doing in crypto. Crypto should be treated as a fundamental level. And as Pete said, I don't understand the fundamentals of crypto enough, but it's not a trade. It's not tradable to me. There are some people who have. We have one in the chat room, MedHat, who have figured out some excellent technical indications on how to trade Bitcoin. But for us, equities, we have SPY. And SPY gives us that edge. The same way counting cards gives you an edge, the same way you can get an edge in many different things. What you always are looking for when you're putting your money somewhere is an edge. You don't want it 50-50. You don't want it to be a gamble. You don't want it to be a coin flip. You want to know you have a statistical edge in what you're doing. Doesn't mean you'll win every time, but if you have an 80% chance historically of that trade performing, and you're looking at your risk reward and you statistically map it out, you're going to come out ahead. SPY gives you that ability. Bitcoin and crypto does not have that same promise.
You have the same issue with FX that you have with crypto, and that is that there's a big missing piece of information, and that is volume. There is not a centralized marketplace where crypto is traded. So you don't know with what conviction buying or selling is taking place. You don't know that with FX either, because there's no centralized marketplace. This is all the inter-market bank. And plus, with regular currencies, you're fighting the largest banks in the world. There's no edge there. Can't fix it, ain't broke. You see what we do week in, week out. Why would I ever leave this market and this edge? I wouldn't. It's performed so consistently. I have no reason to start branching out and looking for other places to invest or trade. This is what we do. This is what works. Did have a question last week, Pete. You said that we should stay away from options that have small retail volume. They get crushed by the market makers. Do I have a crude estimate of the volume that we should be staying away from? So first of all, let me clarify what I was saying. What I was saying was that when Pete says to buy the April 19th $100 calls on XYZ, when Harry says to buy something similar, all the retail customers pile into that one option series. It's so stupid. They will gobble you up. So please don't confuse that with option liquidity and a small trader trying to take a position. We have an option liquidity indicator within Option Stalker Pro, and there I like to have a setting of -2 or higher. It goes up as high as 15. 15 would be SPY and Apple options. And if you have a -2 option liquidity rating or higher, you're going to be able to get 10 lots off and 20 lots. I know that your question was based on, well, you know, how much volume should I have? How much open interest should I have? If you're taking a longer term position, say that you are buying an option that has maybe 2 or 3 months worth of life, you know, you just want the bid-ask spread to be reasonable. You know, a dime wide, if it's a really expensive stock with very high strike prices that are, you know, $300, $400, then okay, you're probably going to have a 20-cent wide bid-ask spread, but you'll be able to get your 10 lot or your 20 lot off without any issues. That's
keep in mind, by the way, market makers are just trying to get to a net neutral. That's what they do. They go to a net neutral. They don't, first off, they don't give a shit about you. They don't. They care about their job. They care about making sure they are not net negative or net positive on any side of any trade. So if a big buy order comes in, they have to match it to the other side with a big sell order. And everything has to remain balanced. The commissions will always flow. The front running will always flow into the platforms, but they themselves, it's not like they're making, not making commission here off you. And keep in mind also 85% of the volume in the market on average is coming from institutions. That's why you will sometimes see these huge shifts, right? That gets into the buildup of gamma, that gets into the buildup of these sort of gamma walls and all of that. That is not something that you as a person, as a new retail trader, should worry about. You shouldn't be that worried about it. If you just stick to relative strength, relative weakness against SPY, if you just stick to the indicators that we have pointed out, and there aren't many of them, you notice our charts are generally very clean. You can see, there's only 3 moving averages on those charts: the 100, the 200, the 50. And you keep your trades, with a very clear checklist. Keep the market first in mind, then the trade, then the instrument that you're using. It's just really, the simpler for you, the better. Do not go down the rabbit hole of option flow and all these other measures and instruments. It's just going to blur what should be right in front of you. NVIDIA, that's relatively strong today. Look at the market. Look at NVIDIA, relatively strong today. What's relatively weak today? What the stocks that we pointed out. AMT is relatively weak today. I mean, there's a number of relatively weak stocks. Those are the ones you should be looking at. And then it's a matter of, what is the market doing? Is the market in a good place for a short? If I took a short today, how comfortable would I be in swinging that short? Would I feel good about swinging that short? Is that a good position for me to be in based on what I'm seeing out of the market right now? If I take a long, market's obviously weak. Am I happy swinging that long? Maybe you are. Maybe on something like NVIDIA, you would be happy swinging along based on how it's performing right now. Those are, about as deep as you should be getting into these questions. Thoughts on a TPR short below 41.25 with a starter position. Stock had a good upward run. This is from Great One Goofy. Compressed and now seems to be transitioning to the downside. It's dropping on volume, slammed through the 50 SMA, 100 SMA below the entry price where I can add, if it confirms, my stop would be the low of the 404 candle. I like it. I like that. I like where you have your add points. Obviously, you have a very clear, if it hits the 100 SMA at 40.14 and is not, breaking through, well, you have to keep in mind with something like that is it may bounce off the 100, but if you're still in profit, you might want to be a little bit patient with it because on the second try, it may break through, given how bearish it currently is. So I like that one from Great One. Good.
Yep, that looks good. And also, if you're bouncing off the 100-day moving average, why are you bouncing off the 100-day moving average? Is it because the market has bounced? Is it because the market's found support? Well, if that's the reason, then as soon as the market starts to soften back up, the stock will fall through that 100-day moving average. So, and I had a question on Pete, if I am neutral to slightly bullish, do I still keep putting on bullish put spreads? So my sentiment has changed from last week. I am slightly more bearish than I was. I'm getting the price action right now and the follow through below the the close of this long red candle. You can see how we're moving toward that 50-day moving average. So right now, I'd be happy with the bullish put spreads that I have on. They are performing well. Here's the kicker. On a short-term basis, I feel there's an opportunity for us to take some intraday shorts. if we go into all of our bearish searches that we have in Option Stalker Pro for many, many months, these are very lean. There's hardly anything in there that you could even find that would represent a good short. Now, all of a sudden, we're starting to see more candidates and we're starting to see more charts that are favorable to shorting. So on an intraday basis, I'm shorting and I'm making money on the short side. That is offsetting any kind of pressure that I might be taking on my out of the money bullish put spreads. And ideally, I'm watching those stocks just as we did with Marvel, mRNA. As long as they're holding up well, as long as they're preserving their relative strength, tick, 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 we're taking advantage of time premium decay. When the market does finally find support in here, yes, I believe we're going to get a bounce because of the strong market rally we've had over the last 5 months. And then, yes, I would be looking to further distance myself from the action, saw some out of the money bullish put spreads on stocks that have preserved their relative strength during this market pullback. And then on that little bounce, I'd be looking to take some gains on those when that lower high double top and that resistance seem to be forming again. So yeah, just be a little bit more flexible where before we were long only mode. Now we're more neutral and we're looking for opportunities on both sides.
I am looking for NVIDIA to pull back here. And if it does, I may consider a long. I really like the strength it's showing today and the volume in it. So I am definitely looking at that. I'm looking at the calls for the 19th, and I'm also looking at a 875, 885 call debit spread. Snapple, you asked about futures. Easy way to be completely ruined. Futures are literally probably your last stop, right? So you enter trading, you go through the 10 steps, you'll find out if you read the wiki. You're getting to a point, you're like, okay, I'm now consistently profitable trading equities. I'm meeting my goals. I've mapped it out like a business plan. This is my monthly goal. This is what my profit needs to be. I'm adding every 6 months to my base account, increasing my profit, expectations because my base number is increasing by a certain set percentage. Now I'm ready to start looking at perhaps trading futures. Once you get in there, there's plenty of stuff out there that I've written, that Pete written, that the professor's written, that Dave has written about trading futures that you can start venturing into. But if you are not profitable, and again, I got to keep hammering this home and home and home. If you're not profitable as an equity trader, stop trying to expand your horizons. That is base. That is like the first thing you need to do. You need to get to consistent profitability as an equity trader. If you can't do that, you can't trade futures. You should not be going and doing crypto. You should not be looking at Forex. You should not be looking at a million different measures and initiatives. Get to consistent profitability. And that means a low standard deviation around that average. If you are in your, I need to make $2,000 a month in profit. That's my supplemental income. That's what I want. But one month you make $8,000 and the other month you lose $6,000. Oh, I'm up $2,000. No, that is bad. You want to average your $2,000 a month and maybe get plus or minus a few $100s. That's it. That's what you're looking for. You're not looking to make, these big swings in your average profitability. So once you get to that, it really is then when you're comfortable, you're hitting it, you're able to pay bills, buy food, take vacations, whatever, off your profits. It's something during tax time, you have to actually be concerned about your profits. Then start looking to expand, then start looking to move forward and think about other things if you want to. If not, just keep increasing your base amount. And if you're consistently making profit, just expand that profit. That's probably your better way to go.
Yeah, and for me, the main time that I would trade futures is I use it as what I call a kicker position, and very good at identifying bullish and bearish trend days. And when I've got a nice position on across, say, 4 or 5 stocks that I've already built to my desire, and I still want that extra kicker, then I will trade futures. So we get maybe 1 out of every 10 trading days, you might have a trend day like that. Then I'll trade futures. But any other time, why are you trading them? Are you so big? Do you have so much money that you have to allocate that you can't find enough liquidity in stocks? No. For a lot of people, it's, well, I just like watching one ticker because it's easier instead of watching 5 stocks. That's not a good reason to trade S&P. It chops around like a mofo. Okay, institutions are in and out of there. They are looking at fair value. You never know when they're going to be coming in and out. It's diversified. It chops like mad. On any given day, I can find a stock that is 10 times better than an S&P 500 trade. That's what I should be focusing on because that I can predict price movement in. That
let's
has
say
plenty of liquidity for me. Okay. How many shares can you trade? 5,000, 10,000, 20,000? A stock will hold that. There's no problem with that.
Let's go back to the relative strength, relative weakness idea. Let's say you were all excited about this drop and you said, I'm shorting futures. I'm going to go short futures. And let's say the other person who's trading equity says, I'm going to short one of the shorts we mentioned, TPR, AMT, you can pick CVS, right? Okay, look what would have happened. If you had shorted CVS as an equity that's relatively weak, look what it's doing during this pop-up on SPY. It's not going up, is it? No. If anything, you're in profit or you're even, you're not losing money here. If you had shorted SPY here, SPY futures, you'd be down, a good 40 ticks here at the moment. So what are you going to do at this point? Are you going to get out of futures? So let's say you stay in thinking, all right, we just broke through VWAP, we're going to stay in. And now let's say it keeps going up. Now you're screwed, right? Now you're just sitting there hoping, right? You're gambling at this point, hoping for a pullback. Whereas if you went into one of the shorts we mentioned that's relatively weak, you're still fine. Even though the market reversed, you're still fine right here. And that is the difference on why you should focus on equities.
It's the edge. Okay. You don't have that edge when you're trading futures because it's all over the board. Look at this shit right in here, quite honestly. Are you telling me that you can look at this chart and tell me what's going to happen on this S&P 500 chart? Most of the days, it's just crap like this. Why would you trade that when you've got a stock even like NVIDIA today? Let's say you bought NVIDIA, okay? There's a reason why Harry's looking at it. Okay, the market's down and I think that we're going to have a bounce off of the low today. All right, so let's say that's your trading premise for SPY. Come into the day, this is an overreaction to the CPI report. I'm going to buy NVIDIA because I like NVIDIA and I've had a chance to watch it. So you get long in here and lo and behold, the bottom of the market falls out off of this high right here. If you're trading futures in here and you're long futures, you just got your ass handed to you. If you're long NVIDIA, you're still higher than you were before.
So I asked, how long should you wait after an IPO? We answered this, I think, last week. You want me the real answer? You should wait a year. You should wait a year before you trade an IPO if you really want to look at it in terms of technicals. There's a difference. I have IPOs. I get IPOs assigned to me through JPM. I get them at a much lower price than what they debut at on the market. But in terms of trading the volatility of it, yeah. I mean, you usually get a huge burst of volume in the beginning, and then you're getting this gigantic drop off in volume where, the slightest trade can matter. I call it the Powerball winner in Iowa or whatever. Someone wins a lottery and they can completely fuck up your trade by taking 100,000 shares on something that, thank you, Dave, by the way, just points out at 30 seconds to the 10-year bond auction. And that 10-year bond auction is going to be very important because the current is 4.5293 at the moment. And that anything over 4.5 is considered very, very bearish. So watch for what happens on this bond auction coming up. The 10-year is about, we should have it here any second.
Very steady selling in the 10-year today as well.
And, you know, look, again, I encourage people, and I wrote a Wiki 2.0 post about this, soak up as much knowledge as you can about all the market forces. It's not bad to have that knowledge. How does the 10-year affect things? What does the CPI mean? What do interest rates really mean? Why does that negatively or positively affect the market? All of those things. It's good to know. The danger with it, you know, the idea of little knowledge is very dangerous. The danger is if you're not experienced enough to put certain weight on that information, you're going to come to the wrong conclusions. And when you do that, now you're basing your trend projections, or whether you're bullish or whether you're bearish, not off the technicals, not off of the price action, but off of your personal interpretation of economic data. And if you notice, whether you want to torture yourself on CNBC or reading Barron's or any of these fucking things, there are people who have advanced degrees in all of this, right? Here's the 10-year bond, bam, look. And they get it wrong. They get it wrong, consistently get it wrong. So what do you think you're going to do with your Wikipedia ChatGPT 4 level of knowledge on it, right? You really need, but again, it's important to build that experience. It's important to know what, holy shit, that bond auction came in at 4.56.
Getting a drop there, and there you can see also that you're getting a drop in the S&P. Awareness, very important to be aware of what the heck is going on, just like that bond auction there. So I was going to mention, I've had a lot of questions actually come in for good reason. What about gold? Gold. Well, we had talked a little bit about crypto earlier. I've watched gold for many years, and I'll be damned if I can figure out what it does from day to day. Recently, it's had a great run. One of the best runs that I've seen in the last probably 4 or 5 years. It's been a nice, steady rally. Typically, gold is all over the board, choppy, no direction. So I don't have an opinion on gold outside of the fact that technically it looks quite strong here.
Yeah, you know, a lot of things like gold, and people get dominated by conventional wisdom, right? Gold is racing higher. That means a catastrophe is on the horizon. That's conventional wisdom, right? That's that people are rushing to put their money into gold because they're worried, right? When anxiety is high, gold goes up. But that's wisdom from like the 1920s. It used to be conventional wisdom that as interest rates go up, unemployment will go up. That didn't happen either, did it? So a lot of things are different because the economic environment is different today. The interconnectedness of why people buy gold, why people do this, why people do that is very different today than it was from 100 years ago. But we're still keeping the same conventional wisdom that people kept 100 years ago now and applying it. So if it's just something that, I heard because gold goes up, this happens, generally, I'd ignore that. As for
there is one thing that I'll note on gold, and I've actually been watching it for a couple of months because, you know, I like following the news in China. The Chinese are buying gold like mad. This is the Chinese people, not the government, because they don't have anywhere else to put their money. They have been screwed 6 ways to Sunday on real estate. They cannot invest in the stock market because they don't trust it. If the Chinese government wants to just close the market for 2 or 3 weeks, they do it. And they've done it in the past. So they don't have any faith in the market at all. They know that the country is wrought with corruption. So they don't trust the financials of companies, and they can't invest in real estate the only thing they can do is to buy gold. And so I think that's one of the reasons that you're seeing gold up so much, is that wealth has to find a place to go somewhere. And everything else during the last 10 years has not worked, and they can't get any of that money out of the country. They can't take foreign investments because the Chinese government won't allow them to. So that is one reason why I think you're seeing a big move higher in gold.
Xavier, you said, is there any good resource to learn how the market works overall? I know I kind of just made fun of it, but believe it or not, subscribing to ChatGPT 4 for $20 a month is more than worth it. If you went in there right now, even if you went into the free ChatGPT and you typed in, explain to me like I'm 5 years old, well, say 10 years old, because it really will explain to you like you're 5. Like I'm 10 years old, how the 2, 5, and 10-year treasury bond options impact the market and why. And do it in 2 paragraphs or less. You'll get exactly that. And it'll be actually pretty accurate. You know, any question you put in there, and you can ask it, explain it to me like I'm a novice, explain it to me like I have a good amount of knowledge, whatever your level is. And you can give it a restraint, 2 paragraphs, 3 paragraphs, whatever, 4 paragraphs. It will tell you. That is, you know, probably a starter. Like if you wanted to get a starter idea of what these things mean, how they affect each other, how they impact each other, why the rise in oil prices might negatively impact the market, what does that mean? Those are all good places to start. Just do your, and this is a human condition, so it's really hard not to, but do yourself a favor. Do not let a little knowledge convince you that you know what's going on. Just let it help color your experience. But if your projections on whether SPY is going to be bullish or bearish or whatever is supplemented by a small amount of knowledge, it's probably, it definitely is not a good idea overall.
And that's why it's much easier. It's much easier to learn how to read price action. And I'm not saying that that's easy, but it's much easier. And then you wash yourself of all the news. I don't have any news on at all during the day. Complete silence. That's how I like to trade. And I don't want to be influenced by any of the crap that the bobbleheads have to say out there, the talking heads who find a reason for every wiggle and jiggle out there. If I follow price, I know what the institutions are doing. And there have been so many times when I will look at a company and I'll go, you know, during the COVID crisis, let's say, for instance, RCL, Royal Caribbean Lines, it's rallying like mad. And I'm thinking, there is no way I would buy that direct right now on a fundamental basis. If you just look at the technicals, it's telling you that institutions are in there buying the heck out of it. Just follow the price action and don't play junior analyst.
I just took a trade. I did on the challenge account. I did a call debit spread on NVIDIA, 870, 880 for $3.88. I wanted to see how it would handle this drop, and NVIDIA's handled this drop very well. 7 contracts, and that goes into the challenge account. So NVIDIA there, and I think I'm going to add here to, no, not the challenge account, but I may now get some NVIDIA. Let's see here. I may get some NVIDIA calls here. Let me just grab some. Okay. April 19th. Okay.
Which expiration you buying?
It's a call debit spread, so this Friday.
Okay. Taking a look at some other questions that we have here. ACAM was a question on a short, and that chart actually looks pretty good. I wanted to see a little bit, you know, you've got this resistance level here at the 200-day moving average. You have a price compression right in here, lower highs, below AVWAP E, horizontal breakdown, below the 100-day moving average. You have this low plus trend line breach, decent volume today. That's why that bar is shaded pink. And we'll go into the M5 chart. This is a really nice looking short here. I like it. I think ACAM has got plenty of room to the downside. Really solid pick. Volume, it's a little on the light side, but what do we care? We're small, retail traders. If you can get, you'll be able to get 10,000 shares of a stock like that off, no problem. There's plenty of liquidity.
Trying to grab some 800 calls on NVIDIA. Got them. Okay. I just got 25 of those. Long NVIDIA 800 calls that expire on 4/19 well, they were expensive, obviously, for $69.65. And I did 25 contracts on that to start.
What would I do with a Baidu bullish put spread that I mentioned in the chat room? I would be legging out of that baby because I am not liking what I see in the market, and I am not liking what I see in the stock. The stock is below AVWAP-E. I'd be buying my short put back, which was the 102. It was a 102 100 bullish put spread, I believe, for a 40-cent credit. So we had the stock was downgraded, which analysts downgrade. I don't care about. I mean, that to me means nothing. I'm more inclined to fade those than I am to join them. But the fact that it was able to stay below this AVWAP-E, the fact that it was below this upward sloping trend line, both of which I was leaning on, also had the 50-day moving average coming into play. That's how we construct these bullish put spreads. You have to get through multiple support levels in order for that spread to be in danger. And I believe this was the first weekend in May, whatever, I could bring that up. First weekend in May was, I think, May 3rd expiration. So yeah, I'd be buying back in those 102 puts, and I'd be letting the 100 puts run and looking for continuation on the downside. You've also got a bearish market backdrop to fuel that move lower, and you have plenty of time. But once that support is breached that we were leaning on for a bullish put spread, ideally you've got at least a few days, hopefully even more than a week until expiration, where you can ride that position lower and take advantage of that breakdown, because that was support and that support has been breached. And now the trade actually becomes bearish. It has a bearish flare to it. This was a basing formation in here, not a great bullish put spread to do. I was looking at the FXI. It had found support. This stock had multiple support. So, those are the reasons for getting into it. If that support is breached, I feel perfectly fine right now being short that stock.
I like here, I'm looking to see, I like Microsoft for a bullish put spread, taking advantage of today's pullback, going out to, let's say, April 26th. Look at the 414. So if I looked at the 410, 405s, and I got that in, maybe I can even do April 19th. Let's see here. The 410, 405s. Let's see, no. The 415.
Look at a buck by $1.35.
The 415, 412 50s you can get for April 19th for 62 cents. Somewhere around thereabouts. 415, that puts it right above. I wanted to get below the 50 SMA there. So I'll probably go to April 26th, do the 410, 405s, get that.
On the 26th, though, I think you've got an earnings announcement.
Yeah, you're right. It's on the 23rd, isn't it? So it had to go to the 419. And on the 419, I'd have to do the 412, 410 for 50 cents is where I'd have to put it. And
You can get it.
Let me see if I can get that. There it is. I got 15 of them for 50 cents. And that is a trade that is going to be for the challenge account. So there's a bullish put spread on Microsoft. Microsoft 412, 50, 410, 419. I like the fact that it's expiring next week for 50 cents. And I did 15 contracts on that spread. And that is.
And that stock has a tendency to rally into earnings. It's rallied more than 75% of the time into earnings once it gets inside the 2-week window. And that's over the course of the last 3 years. We have a search that helps us find that. It's called pre-earnings bull and bear. So you would mark that. You want a stock that moves higher into the earnings announcement. And then you would go in and you would search for projected earnings date. And we're going to select, let's say, within 20 days. And let's put in really good option liquidity. And I would be expecting to see Microsoft in this list. And if it's not, then I'm doing something wrong. I haven't gone out perhaps far enough in time. But anyway, that is how you would search for these stocks.
If you notice and look at, the daily chart on Microsoft, when you're doing bullish, you should always be looking at the daily chart, which despite the fact that we say this a million times a day, people still don't. But look at the daily chart here. Despite the drop today, you have very good support here. If you could just do an upper trend line coming in, it hits the low of the day today. The upper trend line coming from March 6th with 4 touches on it. So you have a low of the day support there. Then you have consolidation. So you have a consolidation there where the bottom of that consolidation is around 418. That's a second level of support. Then you have the 50 SMA at 414. That is obviously the strongest of the three, the third level support. In order for this bullish put spread to fail, the 412.50 puts have to be in danger, which means Microsoft will have to break 3 levels of support before next Friday. I only have 9 days on this trade, and it has to break 3 levels of support, something that Microsoft hasn't broken a single level of support, certainly not the 50 SMA, since way back in October of last year. So Microsoft would have to do something it has not done, regardless of bullish or bearish days, in a long time, 3 times before next week, in order for that bullish put spread to be in jeopardy. That is why I like it so much and took it.
And here's how we find that. So pre-earnings bull, I needed to have this marked, earnings within 2 weeks. And these are your stocks that are going to be rallying into that earnings announcement. And I picked a very high option liquidity of -1 or higher. And here are some of the other candidates that you can see. Google is also in the list. I think Google has recently been pretty strong too. Take a quick look at that. And yes, you can see how Google is unaffected by today's market drop. It is still above this horizontal breakout. So that could be another good candidate. As I mentioned earlier, as long as you're in the AI space, the market's going to be very forgiving with any kind of little earnings whiff. Why? Because they're working on AI, and AI is the future.
All about AI. There may be, just keep, whoa, now we're having a, and speaking of which, the Fed just said AI is going to expand rapidly and replace some jobs. And we're getting a little bump here also because the GDP growth was revised downward. So bad news is good news. The impetus, the focus on this earnings season is going to be sort of almost exaggerated to an extent because we're not going to be relying on rate cuts like we once were. So a lot of these companies are going to have to start showing some great earnings. But if you look at companies like NVIDIA, Microsoft, and so on, I don't see the market tumbling until, I mean, if you're looking and saying the market's going to get bearish and all that, coming into earnings season, that's not going to happen until you get a majority of these top, at least the Magnificent Seven reported. And until that happens, you're going to have some stabilization here. I don't know how far down we'll see a drop on this market. Obviously, it's bearish today, but you'll start seeing a stabilization here in the market at some point, specifically because we're going to earnings season, and financial earnings actually start this Friday.
Yep, and that's what I had mentioned, is that in here we could see some continuation for about a week or so to the downside to probe for that support, maybe the 50-day moving average or so. And if you are short, and if you have taken any overnight swing shorts on any big drop, you must take profits. Do not wait for the bounce, because there will be one, and it's going to be sharp, and it's going to be violent, and you're going to be losing money if you wait that long. And that bounce is likely to come right into those mega cap tech earnings. And then you got to see how high we rally. Do we make that lower high double top? If we do, then we might see resistance, for a few months. Economics is really important right now. All of the numbers in the US have been very, very strong. Companies and asset managers, they're going to wait. They'll keep these valuations. They don't care about valuations. If the economy starts to weaken, then they'll start to worry about valuations. But until then, companies will be able to grow into their current valuations as long as the economic conditions remain strong. So, yeah, I'm looking for a little follow through selling in here for maybe the next week to week and a half, and then that bounce into Microsoft, Google earnings.
I agree. All right, let me see if I have anything else here on read the damn wiki, look at the daily chart. Yes, good on that. That's pretty much right. Anything else? CVS weak enough that you could have considered entering a short, even though SPY could not get back down to the low of the day. SPY breached the low of the day. I struggle with watching stocks move a lot while the market is not doing much. That's exactly what you want to see. You want to see stocks that are moving when the market's not doing much, because that's holding SPY constant. So all the movement in the stock is stock specific, which means institutions are either driving it up or driving it down. It's not the market driving it up and down. That's what you want to look for, Leo. And how's Tesla doing today? Well, you know how Tesla's doing today. Tesla today is down $5 at 171. Tesla's been doing pretty shitty, actually. And that's why I'm not trading. I wouldn't short it because it's so damn news sensitive. And, Elon could put our next car is going to be a flying car, tweet out, and it'll go up $6. So Tesla used to be a great stock to trade, used to be, it's really lost a lot of luster this past year.
And Tesla will be a great stock to trade again. And it'll be a great stock to trade when you see nice, tight price action like this. When you see nice, tight price action like this, then it's time to get back into Tesla. When it's doing this, you want to avoid the hell out of it and any other stock that's doing this. You want those nice, tight patterns.
I'm going to grab a little bit more NVIDIA there. Maybe grab another 15 of them. Okay.
All right. Well, what would you like to be your trade of the day? NVIDIA?
I'll take NVIDIA.
You'll take NVIDIA. All right. NVIDIA on a nice little pop in here, looking for you're definitely neutral. Are you neutral, would you say, at this juncture?
A little bearish, but bearish neutral.
Yeah. Okay. I'm just edging a little bit bearish for about the next week and a half. I think that we've seen some selling pressure in here. I think we're going to have to flush out some of these sellers and profit takers and find support. So I'm not overly bearish, but I would be holding off on bullish put spreads just for the next few days here. I want to see how far we can go down. And then if we get to that 50-day moving average and find support, we start getting closer to the mega cap tech company earnings releases, which let's say next Wednesday, then I'd be looking to start putting some bullish put spreads. What I'd be leery of is any long red candles like this that start to stack. That would probably be news related. I can't see any kind of news that's going to be generating something of that magnitude, but just so that you know what I would be watching for price action wise. Just overlapping mixed candles on the way down is what we want to see, and that would be a sign that buyers are still engaged.
I just posted my add to the video there, added another 15 to the 800 calls for 419. My average price is now 71.85 on 40 contracts at the moment. So,
and I like that CVS short. That's my pick. So we've got a balance of longs and shorts, which is kind of neutral. It's where I would kind of be right now. Keep it short term, see what happens in here, see how far this dip is. For long only traders, wait for that support. Look for possible bounce into earnings season.
Sounds good.
All right,
everyone.
Thanks for joining.
By the way, Meta is another possible good long. I forgot to mention that, and thank you for let's see here, Kim, for mentioning it in the chat room. Meta very strong today. Obviously, good chart. I'd love it to see it above its all-time high, 531. But it seems like it's heading right back up there. Very good, solid pick there, Kim, on Meta. Nothing wrong with the Meta long here, even with the market the way it is.
Yep, Meta, Google, Microsoft. What was the other? NVIDIA.
Yep.
AI. If it's in the AI space, it's going to be holding up relatively well because that's where the asset managers want to focus right now.
Until they kill us all.
All right, everyone. Good luck with your trading this, and we'll see you next week.
Bye-bye.